Welcome to the Slacker Trades weekly screen for the week of July 20th, 2026. Each week, we analyze around 110 stocks through a rigorous safety filter, aiming to find option premium that's truly worth writing. This week, 29 stocks stood out with eye-catching premium, but only 10 passed every safety check. We'll take a close look at each of those 10 and explain exactly why they earned their spot. Here's the funnel for this week's Slacker Trades. We started with 29 names offering eye-catching premium. Out of those, 18 didn't make the cut because they failed our safety screen. They were either too stretched above their trend, moving too violently, spiking like lottery tickets, or just running hotter than their usual levels. That left us with 10 names that passed all the checks, trend, volatility, and history, and earned a spot on the list. So it's important to remember that rich premium alone isn't enough. The name has to pass all these critical assessments before it counts as worth writing. This week's story is all about technology without the fever. We have 5 tech names: Broadcom, Snowflake, ASML, Nvidia, and Cisco, that passed all our checks. They've either pulled back or moved into consolidation, so volatility is settling down, but their option premiums remain impressive enough to take note of. On the other hand, 14 more tech names in the same sector offered higher premiums but didn't pass the safety screen. So, the sector is really split in two right now. The key takeaway here is that getting paid on the calm half of a busy sector is where the real opportunity lies. It's about balancing risk and reward by focusing on stability in a fast-moving space. Now, let's look at dealer positioning through the lens of gamma exposure. This metric helps us understand whether options dealers are generally trading against the market's moves, which tends to stabilize prices, or alongside them, which can amplify market movements. Currently, 65% of the roughly 110 names we monitor are in positive, stabilizing territory. Even more striking, 8 out of this week's 10 picks fall within this stabilizing zone. However, 2 notable exceptions are Broadcom and ASML, which read negative in dealer positioning. This suggests that price moves in these stocks can extend further, which is partly why they offer higher returns. Keep in mind, this is an estimate based on standard assumptions, so it's a useful context but not a definitive rule. Starting with Broadcom, we see it's down about 7% over the last 3 months and roughly 23% off its 52-week high. Yet, it's held its ground in around 86% of similar historical periods. The key here is that while most investors have moved on, the premium remains elevated. That discrepancy is why it makes the list. Moving to Snowflake, this one stands out, up 87% and close to its high. Despite being a momentum stock, it cleared all our rigorous checks, which is quite rare and says a lot about its strength. Next, ASML represents the quality setup of the week. It has an impressive 93% hold rate, and even its occasional dips don't breach the levels we're concerned with, showing dependable performance. Nvidia presents a steady, measured setup. Its price has stayed flat over 3 months, with no major flags or flashy moves. Finally, Advance Auto Parts resembles Broadcom in that it's been somewhat abandoned by the crowd, down 6% and 20% from its high, but maintains a premium near the top of its range. This divergence is exactly why it's on our radar. Overall, these names mix stability and potential in a way that's worth watching closely. Let's talk about the back half of this week's top 10. Starting with United Airlines, which is up 21% yet still about 15% below its 52-week high. This is exactly the kind of steady, well-screened stock this list is designed for, offering a fair premium. Moving on to Cisco, it stands out as the top quality setup of the week with an impressive 94% hold rate, meaning it's very reliable during comparable market stretches, and its worst dips have been short-lived. Affirm and Macy's also make the cut, though they have a thinner historical track record, holding their ground roughly 70% of the time, which places them firmly in the mid-range territory. Delta rounds out the list with no big headlines or drama, which in itself is a strong point. Stability over excitement. A keynote for all 10 stocks is that their upcoming earnings reports fall outside of our trading window, so we avoid any sudden surprises or earnings-related volatility within these setups. This stability and predictability are what make this back half of the list compelling and reliable. Here's the screen for this week. Members get the full sheet, including the exact strikes and expirations for all 10 names. We also provide the defined risk spread version of each name, along with detailed dip profiles for every stock. Remember, this is research, not financial advice. We do the screening and study the data, but ultimately, you make the decisions. Options carry substantial risk, and it's important to know that a stock's past behavior is descriptive history, not a prediction. Thanks for joining me today, and I hope to see you next week. In the meantime, consider joining us at slackertrades.com.